really sucks. It's not. I wish there was an easy answer to that, but there's three problems with this. You can either tax revenue when a sale is made, and that's called a consumption tax, and it tends to get passed on to the consumer.
Yeah.
Or you can tax profit, and it's very, very difficult for a geographically limited country to tax a digital product, because if I'm leasing my database of Luxembourg, if I'm creating my brand assets in the Virgin Islands and then renting them back, right? Now, you can say, oh, we ban that. I hate to say it, but that's global trade at the moment. You'd literally be moving in the direction of North Korea because the rest of the world is digital, right?
But
Okay, so he said he was going to raise 3 issues, but he only actually raised 2. So he talks about consumption tax, revenue tax. And again, I think for me, there's a deliberate, if I'm being honest, conflation of what we're talking about. So a revenue tax, he's correct when he says a revenue tax will typically be passed on to the consumer, but any cost of any kind, any corporation tax will be ultimately passed on to the consumer if that business is going to be profitable, right? So that's the first thing. And also, it's something that the government can just make a business do if it chooses to do it, right? So it is a workable solution, but it's not really actually what we're talking about when we talk about a wealth tax, because taxing revenue is the same as taxing income. And the wealth tax is being positioned as an alternative to taxing income, right? So you're only considering revenue as a way of determining the valuation of the business,